Welcome to the Amplified Whole Health Podcast, where personal and organizational health meet. I'm your host, Justin Collier, and my goal is to bring you insightful interviews with business owners and leaders from a variety of different industries. We'll be talking about employee development, leadership, company culture, and quality products and services, and how they drive success in business. Thanks for joining me, and let's get started. Well, welcome, Steve. I appreciate you joining me on the show today. So your name's Steve Sefcik, and you're a CPA.
Yes. Mm-hmm. And Justin, it's great to be here today with you.
Well, thanks. I'm looking forward to this. I think what's interesting, at least from my perspective, as we start to have this conversation around, what does a CPA do? I know oftentimes I think of a CPA as somebody who's helping with personal taxes, but it goes far beyond that, right?
That's right. Yes.
Yeah. So maybe fill us in a little bit on what does that really mean or look like? What does a CPA really do outside of personal stuff?
Sure. Well, there's, all kinds of CPAs in that regard.
Okay.
People think of a CPA as kind of being this all-knowing individual from a financial standpoint, and that's not really true. If you think about the legal profession, you've got, everybody's a lawyer. They're a licensed lawyer, and technically, I guess they can practice any kind of law they want. But you've got people who are constitutional lawyers. They're family law attorneys. They are divorce attorneys. They're trial attorneys. They are business attorneys, and they really specialize and focus in certain areas because the subject matter is just too great. Well, it's the same thing with CPAs.
Okay.
You really have people who focus on auditing, for example, or taxes. Taxes, you can have, people specialize in business taxes, personal taxes, estate taxes, Again, the subject matter is just way too broad for anybody to have, knowledge of everything. And the continuing education is such that it's really tough to keep up with stuff.
Sure.
Okay. So, then you get CPAs who, like myself, who do a lot of business consulting as well as taxes and accounting. Now, my practice specifically, I don't do auditing, for example, because it's really tough for a solo practitioner like myself to do both auditing and tax work. And consulting on top of that is just way too much to be able to do that. So does that give you an idea of kind of what we're talking about?
Yeah,
okay.
absolutely.
And the other thing that I would say, a differentiation, I know that you deal with, or this is geared, I think, more towards smaller businesses. Okay.
Sure. Yeah. We talked to a bunch of different size folks, but one of the things I think that is important for us to have the conversation today is definitely how does this impact a small business?
Yeah. Okay. And the reason I bring that up is because, you've got everything from the big four, used to be the big eight, and then went to big six. Now it's probably the big four. Okay. I mean, these are multinational firms. Broad. Now they can do everything. They do everything. Okay. But the price tag, of course, is obviously a lot greater than a small business needs. A small business doesn't need that kind of capability.
Yeah.
So smaller businesses are more likely to go to a regional firm or even an individual like myself or small local firms.
Yeah.
Okay. Small local firms, again, are going to have a little bit greater capability probably because they may do auditing as well as taxes and estate stuff, but just on a smaller scale. All right. So I think for the smaller businesses, they're definitely be looking at their local CPA in their town.
So let's start maybe with the personal side, and then we'll move into the small business.
Sure.
As an individual, how do you know when you should be bringing on a CPA?
Well, from a personal standpoint, I would say, if you're a business owner, soon. Okay, probably right up front. Okay. If you're an individual, you're somebody who is an employee, you're working somewhere, you get a W-2, you get some 1099s for investment income, things like that. TurboTax is probably going to work fine for you. You don't need a CPA.
Yeah.
Okay. You may have some specialty issues that maybe you're going to do on a one-off. Okay. Or you have wealthier individuals who, because of their business, their investment interests and things like that, may need some additional firepower.
Got it.
But I'm thinking if you are, the typical employee, again, you get a W-2 and a 1099, I'm not sure you need a CPA to do that.
Sure.
Okay. Now, if you're a business owner, all right, part of what I do as well is I will say, my target area now is from a pre-startup Okay. So somebody who's thinking about going into business.
Yeah.
Okay. For me, up to about 5 million or so.
Okay.
Okay. In revenue.
Yeah.
I have had clients larger than that, but for the most part, that's a good break point for me.
But 5 million is not a small
That's
organization.
not a small company. Most of your listeners are probably well within that range, frankly.
Yeah.
Okay. And the reason I do that is primarily, again, as a sole practitioner. Okay. I only have so much time available.
Yeah.
Okay. Larger organizations are going to have greater needs. They may need auditing, for example, as well as tax.
Yeah.
Okay. So the breadth of services that they need is going to be greater. Right. So they're going to need to go with a larger firm, for example. Yeah. So I will work. So your question was, when do you bring one on? If you're a business owner, I would say sooner rather than later. Okay.
And why is that? Like, what is it that is kind of like the trigger, sooner rather than later? But why? What's really the driver there?
I would say, you know what, up front, you're probably, another professional you're going to want to have in your pocket there is as an attorney. All right. Depending upon how you take the entity, you probably want a little bit of legal advice in terms of what kind of entity. Now, I can advise clients on that as well, but I tell people, hey, I'm not an attorney.
Yeah.
Okay. So if you need specific legal advice, okay, you definitely need to go to an attorney. Okay. But in terms of if you're going to form an entity, okay, technically people can do it themselves. Actually, I have clients that do it themselves. Okay. I would recommend spend a little bit of money to have an attorney do it, because they make sure all the I's are dotted and T's are crossed. Okay. Typically when an individual does it themselves, they're doing the absolute minimum filing that they need with the state in order to get in business, to be legal with the business.
Right.
Okay. That doesn't mean necessarily that they're set up the proper way with their company agreements or their bylaws, things like that. An attorney can add that value up front.
Yeah.
Okay?
But I mean, so much of what you're talking about, though, as far as like this, having someone help you define and set this stuff up, it matters, especially when it comes to your taxes.
Yeah,
the
absolutely.
entity that you've created.
How you are taxed, okay, will depend upon, do you have partners? Are you sole practitioner? How big is the business? What kind of business do you have? I mean, there are all kinds of issues that you'd want to sit down and talk to your CPA about. Yeah. All right. So that's one aspect of it, certainly. Okay. The other thing is, depending upon a CPA, some of them tend to be, depends upon their strategy, I suppose, in running their practice, as to whether they want someone to already have been in business and that they are then really focusing, say, on the tax.
Got it. Yeah.
Versus the CPA, like myself, who says, look, I like working with you to help you with your business plan, with your financing plans, helping you through this process. All right. So the sooner I would get involved with somebody, the better for both of us, actually. Helps me to understand them better and to guide them better.
Yeah. From
their standpoint, they have a better understanding of how to move it forward. The other thing would be obviously the accounting system. Okay. Depending on the kind of business, how big it is, what you're doing, how you're structured, getting the accounting system set up front saves a lot of time and effort. For example, me coming in and having to retrofit something that you have, gerrymandered, put it together, and now I have to, undo certain things.
Yeah.
So
yeah. Now, you wouldn't or do you? Maybe this is better. It's a question, which is, do you recommend someone immediately starts an LLC or a partnership or whatever anytime they're thinking about going into business? At what point should someone form an entity?
Good question, because I do get that quite a bit. If you have a kind of business that you've got some major investment coming in. And again, I'm not talking about venture capital,
right?
That kind of thing. That's not my marketplace. It is not the marketplace for the vast majority of the people listening to because it's such a small piece of business anyway.
Yeah.
Okay. People are going to do an IPO or get venture capital. I mean, it is a small slice of the business community. But I mean, somebody who is, you've got some family members, you got friends, friends and family. You may even have some angel investors eventually that get involved.
Okay.
Okay. So
somebody who's coming in with some capital and significant capital.
And there I would say, okay, let's sit down. Let's, you've got the dough to, move this thing forward in a big way. You've got a more elaborate business plan. You know you're going to do this. Well, let's set up some of those structures right up front.
Yeah.
All right. If you are the individual who is starting out maybe with a side business, all right, you probably don't want to get too technical up front. You don't necessarily want to get too structured up front, because that does involve, for example, if you're going to set up an S corporation, okay, that takes some filing with the IRS. It takes, which is going to cost you some money. The CPA that you sit down with is probably going to charge you to do that kind of work. Okay. Plus, if you decide, well, I don't want to do this anymore, you have to undo a lot of that stuff. So unless you're really committed to the business and have some staying power, you probably want to start out as just a Schedule C sole proprietor. Give it a try for a little bit. Figure out what you're doing. Now, I say that.
Do you have to file specific paperwork if you're going to do a Schedule C sole proprietor with?
No, not at all. That you just decide that you're going to be in business. Maybe we talk a little bit about some of the legal entities first. Okay. So when you're sole proprietor, it's one individual who decides, I want to go into business. Okay. This is what I'm going to do. And they just decide to do it. They go out and perform their service.
Yeah. Like you're going to make soap and sell bars of soap.
Sure.
Down at the local flea market.
At the flea market.
Whatever.
Right. And most of those people probably are.
Just a sole proprietor.
Sole proprietor, they file a Schedule C with their tax return.
So they're doing their normal tax return, and then they've just got this additional Schedule C that they're going to fill out as part of that process.
Exactly.
And they don't really need to do anything else.
They don't need to file with the state at all. Okay. And keep in mind, all these entities that we talk about are not at a federal level. They're at a state level. All this is, so the state of Arkansas is different than the state of Texas, the state of New York, that kind of thing. Now, there's an awful lot of similarities, especially when you get to LLC law. That seems to be an awful lot, or corporation law even. There's an awful lot of similarities. So I could probably talk in 80% generalities with most states, but there are. And that's one reason why you have an attorney, okay, who knows those differences.
Yeah.
Okay. So that's the sole proprietor.
Yeah, and actually, if it's all right, I'd like to pause you.
Sure.
How important is that attorney-CPA relationship?
Pretty important, actually. I work closely with attorneys. Depends upon the entity. I happen to be working closely with one right now, actually on a termination, in that the individual has decided that it's time for them to retire. Okay. Well, it's time for them to shut down their business.
Okay.
There are specific steps that both the attorney and the CPA need to coordinate on, okay, in order to bring that to a kind of a successful conclusion.
Yeah.
Okay.
It's not, you don't just like wake up on a Monday morning and go, I'm shutting down my business.
Yeah.
There's more to it than that.
Right. Yeah. And part of my consulting practice is working with buyers and sellers of business as well. Okay. And one of the things I will say is that do not wake up one day and decide you want to sell your business. This should be a multi-year decision where you're looking down the road, because some of the things, the way you manage the business while you're owning and operating it may be different than when you're selling it. And you want to position it for sale. Okay. So you should be thinking about that ahead of time.
There should be an exit strategy.
You should definitely have an exit strategy. I like to tease clients and say, you're going to have an exit strategy, or you need an exit strategy because you're going to exit the business one way or another, whether it's horizontally or vertically. Okay. You are going to exit this business.
Yeah.
So you're better off thinking about that up front and having a plan. Okay. When the time is right.
Yeah.
Now, there is a voluntary exit strategy and an involuntary, as I've just kind of hinted at, okay, which leads to a succession plan, okay, in that you should, have some basics down in the event of your death, incapacity, that kind of thing. What am I going to do with this business? How is it going to be dealt with? Now, you're a sole proprietor making the soap at the
flea market
there. Yeah. I mean, that's pretty easy. You just basically take whatever's left over and get rid of it.
Yeah.
There's not much else to do. Okay. But if you're
so let's move on. Yeah. So we've talked about the Schedule C idea. What's the next?
Okay, so the next one would then be you have a partner.
Okay.
Okay, two people get together and say, well, let's form a business here. Let's do this together. Okay, that's going to take another area where you probably want an attorney. Okay, because partnerships can be formed even if you don't intend to form them or think you're forming them. Okay. So you got to be careful about that. Okay. But it is important to then have a company agreement. Okay. Let's say you're willingly coming together. You and I say, let's form this business. What you really need to do is have a company agreement that says, this is how we are going to run this thing. Okay. Who's going to be making the management decisions? Are we both general partners? Are you a general partner? I'm a limited partner. I mean, those kinds of things. How are distributions going to be made? When are distributions going to be made? There's a whole myriad of decisions that need to be followed in operating the business. Okay. Starting and operating and even terminating it. Okay. So you want to basically get that in a written document up front. Okay. So that takes some coordination. All right. Now that's going to be when you have a partnership, now you have a separate entity, which now has to have a separate tax return. Okay. Yeah. Now you are on a federal level. All right. So let's keep in mind that you've got federal issues to deal with and you've got state issues to deal with. Okay. For me, my practice is in Austin, Texas. Okay. Texas has a very, from a business standpoint, of course, we have no personal income tax. Okay. On a business standpoint, there's a very high threshold of where on a state level, you do need to file a tax return, but no taxes due. Okay. So there's some thresholds you have to actually, exceed before you actually pay tax. All right. But you still have to file a return.
Yeah.
And then you've got the federal, okay, which of course every state is, people are subjected to. So on a federal level, and I'm going to talk primarily from federal level, okay, because this is the state of Arkansas here. So, I'm not prepared to talk about, Arkansas.
You practice in Texas. So.
I practice in Texas.
Yeah.
So, on a federal level, then now you have to file a 1065, which is a partnership return. Okay. And it's not technically a tax return. It is an information return. And the reason is it's what is called a flow-through entity. And what that means is that the partnership itself does not pay tax. Any profits, losses, deductions, credits, etc., flow through to the individual. And they get what is called a K-1, which lists all this stuff out.
Yeah.
And then they integrate that into their 1040, their personal tax return.
Got it.
Okay.
So at this point, you're still not filing as like a true business in this sense. Like when I say, but you're not filing as a true entity when you think about like a corporation.
Yeah.
It's really more at this point still going on to your personal tax return, That's much correct. Like the Schedule C.
That's correct.
Okay.
That's correct.
Got it.
Now what happens is that there's a specific place. Now you may be as an individual. Let's say you're a silent partner, okay? Or you are, even if you're a general partner, okay? You're going to be getting these K-1s, okay? Those have to be integrated into your 1040. Yeah. Now that's becoming a little more difficult, okay? You may need CPA help on a personal level.
I think what's really interesting about this is I think for a lot of people starting a business, there's a big fear element. It's like, okay, I'm going to take this step. I'm going to, leap into something new that I don't necessarily understand. And then on top of just trying to get into business, there's all of these tax implications and everything, and legal implications and all the stuff that goes along with it. And that adds this burden of stress. And so I think for many people, they get kind of hung up in how am I supposed to do that? And start
what do I do?
Business
yeah,
and
what do I do?
Like, oh my gosh.
I don't know what to do. Yeah. And that's why you need good professional advisors.
Yeah. I mean, it's just one of those things like you should just spend the money and get some help.
It's a good investment.
If you're going to start a business, you need the help. You cannot go out.
You can't do it all yourself. Yeah.
And nor should you.
Right.
Because it's like, what do you want to do? Do you want to run your business? Because that's what you're good at. You're good at making the soap. You should be focusing on making the soap, not figuring out tax implications.
Or you get the hairdresser.
Yeah.
Loves cutting hair. Okay. Well, now winds up, opening a studio and having people coming in. They're cutting the hair and the other, the the owner is now doing the accounting, any kind of disbursements. They're taking care of all the business stuff. They're not cutting hair. Yeah. Well, they're not doing what they really like to do. Yeah. So some of that stuff can be outsourced. Outsized bookkeeper, for example, or a CPA, and that kind of thing.
I think founders find themselves in that situation a lot, where they end up doing the things in the business that they don't love doing.
Right. Hey, I'll tell you what. Before we go down that path, let me just quickly finish the tax
Let's
thing.
Let's do it.
Because we're kind of halfway into it. Let's
go for it.
I'll just quickly talk this through, and then we can get back to this issue. So you can you can set up the general partnership. You don't really have to do anything with the state.
Yeah.
In general. Okay. However, you can have what's called a limited partnership. Mm-hmm. Okay. Where you have a general partner who runs the place, and then you have these limited partners. Okay. One thing about a partnership, by the way, is every partner is liable for any debts of the business. Okay. Business gets sued, you borrow money, whatever it is, everybody is individually liable as well as collectively. Okay. So what you can have, now you have to file with the state, is what is called a limited partnership, where you can have one or many general partners, and then you have these limited partners who basically are putting in money only. All right. They have no say in management. Their liability is limited to their investment.
Got it.
Okay. That would also involve a 1065, by the way, in terms of tax filings. Okay. So similar to the general partnership. Now there is a lot of people heard about an S corporation.
Yeah.
Okay. And they think about this as a separate kind of legal entity. Okay. Which isn't technically true. What you've got is you've got your legal structure. Okay. Which would be, an LLC, a partnership, a corporation, whatever. And then you elect to have an S corporation election that you make with the federal government. And it's really strictly at the federal level. Some states do have kind of the equivalent of an S corporation. Okay. But that's separate from at the federal level. So the S is the election you've made with the with the IRS to be taxed a certain way. Mm-hmm. Okay. But you're still you still have a separate legal entity. I, for example, am an LLC. I'm a PLLC, which is a professional limited liability company, but I file as an S corporation. Okay. So if somebody was to ask, what are you? I'm an LLC, the filing as an S corporation. That also is a pass-through entity, which means the S corporation is not taxed. All right. Again, file a return, an 1120S. All right. It's an information return. Looks and smells like a tax return. The only difference is the entity doesn't pay the tax. Everything is passed through to the individual. And once again, you get a K1, a different kind of K1 that goes on your 1040. Now, another level of potential complication, if somebody's got partnerships and S corporations, now you got two different kinds of K1s to deal with, and that can get a little complicated because there are differences. The last thing that I'll cover is what we think of is the C corporation. Mm-hmm. All right, that is a separate legal entity that does pay tax. Mm-hmm. And this is
what's an example of a C corporation, just off the top of your head? Pick one.
Google, Amazon, Microsoft. Okay.
Yep.
One of the advantages here, all right, and that's why most of my clients, I do have them, okay, but some of them have come to me as C corporations already, and they all eventually elect to become S corporations, frankly. So the legal entity is a C corporation with an S status. Okay. Mm-hmm. Why do they do it? If you think you need additional capital, because it's going to be easier for a C corporation to get additional capital than probably a partnership. Certainly, a sole proprietor really can't get additional equity capital. They have to borrow. Okay. So I think if you're positioning the business again like a technology business to maybe target for an IPO or something like that, well, you're going to really need to be a C corporation. Mm-hmm. But again, I think most of your people listening to your podcast, probably a C corporation doesn't necessarily really need to make sense. Yeah. So the major drawback there, okay, is the whole issue of double taxation. All right. With a C corporation, the corporation actually pays tax, federal taxes. So whatever they earn, okay, they're paying tax to the federal government. Now, any dividends that are passed to the individual, okay, that individual is paying tax on that as well. So those earnings are taxed twice rather than once.
Yeah.
Right.
Yeah.
So that's why you see the vast majority of entities in this country, okay, are S corporations. Outside of sole proprietors.
Sure.
There's a ton of sole proprietors, certainly. But in terms of entities, okay, they're filing as S corporations.
Got it.
Yeah. There was some question whether that would change with the recent Trump tax changes, but it seems like nothing's changed there. We'll have to see how that shakes out in the future. But
yeah, makes sense.
Okay,
Awesome.
so I just wanted to bring.
Yeah, no, I appreciate that. I think that's really good perspective for so many people because it is, in some ways, daunting. I think trying to figure out, well, what do I need to be and how do I need to be? And
hey, with the tax laws the way they are, it's taunting for the CPAs to keep up with it.
Yeah. Well, and speaking of, I'm sure there's a lot of continuing education that you go through.
Yeah.
It's like me. It's like I'm not studying this stuff. I don't understand it. I don't. It's like I can file my own taxes thanks to TurboTax, and beyond that.
Yeah.
I mean, it gets over my head really quick.
In the state of Texas, I'm required to do 40 hours a year in continuing professional education. Not all in tax necessarily. I mean, there's a broad range, but the purpose of the CPE requirement by the Texas State Board of Accountancy is to keep CPAs up to date on what's going on. Okay, and you really do that through your CPE, and there's a ton of options to do that. So,
yeah. Well, so we talked a little bit about these different corporations, and we started to go down a rabbit trail.
Yeah, go ahead. Let's get back to that.
What founders are doing, right? This idea that founders oftentimes, I think, get caught up doing things in the business that they don't really enjoy, and they think that that's what they should be doing. So it's like you said, the hair, you like to cut hair, and now all of a sudden you find yourself doing all this paperwork and more running the business than doing the actual thing that it is that you were particularly passionate about.
Right.
And do you think that causes or prevents companies from growing effectively because they get distracted with other things, or do you feel like maybe they get burned out? Or, I mean, you've talked to a lot of small businesses, so what challenges do you feel like they run into?
I was thinking about this the other day, and once again, I think for probably your target audience, one thing I would advise smaller companies to be aware of, okay? There is a difference between a giant multinational corporation and, the small, corner guy doing something. Okay. They're completely different worlds, and this small businessman, okay, business person should not be looking to the larger corporations, seeing what they're doing. Okay. And try and emulate them. And primarily because of resources. They don't have the financial resources or the human resources or the, other organizational resources, technology resources to try and match that in any way. All right. They've got to recognize they've got limitations they have to deal with. And I think one of the major problems that I encounter with smaller clients, okay, is limitation of finances. Okay, let's face it, they just don't have enough capital.
Yeah,
right? They're probably undercapitalized to start with, frankly. Okay, and then it becomes more difficult for them to borrow. All right, so they're and they don't have great profitability. I mean, they don't have the margins of a Google or an Apple or people like that. I mean, some of these people, a lot of small businesses, the owners are making a living at it. And that's it. They're never going to get really, really big. What they can have is a profitable and a very good lifestyle, by having their own business, But so to try and mimic what, to read the newspapers or see other kinds of avenues, seeing what the big companies are doing, forget it. You're not going to match them.
Yeah.
Okay. It doesn't mean you don't have to compete with them sometimes, but you can't match them. You can't go toe to toe. Okay. So, and when I say resources, not just cash, it is, the human resources, i.e. finding a trained staff, that can do the job.
Yeah.
All right. That can be difficult. All right. And that can be a real limitation to growth,
Would you recommend, the person who's cutting hair, who started their business because that's what they wanted to do, and now they find themselves doing paperwork and all these other things? Would you generally, if you were to walk in and to begin consulting with them, would you typically recommend that they figure out a way to do that differently and to get them back into the thing that they were passionate about? Or would you typically recommend, no, you got, keep doing this, and cutting hair is not as important right now?
Well, I think that depends. You know what? That really depends upon the individual.
Okay.
And part of the role I play, I think, with those individuals is kind of psychologist, I guess.
Yeah.
And they don't lay down on a couch and talk to me, but it's the same kind of thing. I mean, what do you want to do? If you want to cut hair, and you really like to cut hair, then probably either go rent your own space and cut hair. Or if you want to have your own business, you could always, if you've got resources, you could always hire a manager to do that stuff, and you go cut hair.
Yeah.
You're still the owner of the business. You're profiting from it, et cetera, but you got somebody else doing the work of the general manager, and you're cutting the hair.
Yeah.
Okay. Do you say, I like being in the hair cutting business, but I don't necessarily want to cut hair. I want to open a studio, and then I want to open a second one and a third one, and I want to become, the owner of a bunch of, beauty studios,
Sure,
or whatever they're called.
Yeah.
So they've got to figure out what they want to do. Now, if they want to be the owner, okay, then that's what they need to focus on. I shouldn't say the owner. The general manager.
Yeah.
Okay. If they want to be the general manager of the business, then they need to kind of forget about cutting hair, cut maybe in part-time, cut a few select clients, something like that, and focus on the business, because the business needs focus. I've had clients who have failed because of absentee, ownership and management. Businesses were perhaps marginal to start with. And if you're an absentee owner, it isn't going to fly. So if they decide they want to be the general manager, okay, and take this thing forward, okay, then they have to look at, I think, things like, what are they good at, and what should they do versus what should they outsource, okay? And this kind of hits at what we were talking about before, the marginal stuff, okay? You got employees. I think I only have one client at this point, and I really don't want to take on any other clients who don't use a payroll service, because that is going to get you in deep with the IRS if you don't do that correctly.
So you'd recommend someone who's going to have employees get a payroll service?
Absolutely. And if they were my client, I would require it. That's how important it is.
Wow.
I've had clients in the past where they have had major tax problems because they haven't properly made their tax deposits and things like that, and they're working through those issues now, and they can be a real problem, and they catch up with you over the long term.
Yeah. So it's not day one.
It's not day one. It's more like 2 years from now.
Yeah.
By the time the IRS reconciles all this stuff, okay, it can be 1, 2, maybe even 3 years before this stuff is caught up with you, and then it's a real problem. Okay, so that's number one. Okay. And I don't do payroll, for example. I don't do what I call operational services. Okay. Because that is a specialty type thing. Okay. And you need somebody who can do that on a regular basis. If I was a business owner, I'd have to be asking myself, well, do I want to be able to take time to go on a vacation if I can, or do I have to be here to do payroll? Well, if I got a payroll service, the payroll's being taken care of.
Yeah.
Okay. Bookkeeping is another one of those things. Okay. Now, I do recommend for people starting out businesses, okay, I'll help them set up their books and start to kind of get going on this. A lot of them I would recommend, probably they're small enough that I would help them up front. I don't do bookkeeping services myself. A lot of CPAs do. That's a important part of their practice. There's a lot of independent bookkeepers out there who can do this work. Okay. But I would say with the owner, do some of the bookkeeping up front, So you're comfortable with the financial statements, what they mean. How do you use them? The bookkeeping itself. When you have to actually do the bookkeeping, you have a better perspective on what all this stuff means. Okay. But then eventually step out of that because it's certainly not a waste of time. It's something that needs to be done.
Yeah.
You just shouldn't be doing it,
Yeah.
Yeah. Outsource it. Pay for it. It's relatively cheap, just like payroll companies are relatively cheap.
Yeah.
For what you're getting. Okay. Bookkeeping is kind of the same way. All right. Take the burden of data entry and reconciliations, all that kind of stuff off your plate. Okay. So you can start to focus on the development of the business, the strategy of the business, that kind of thing.
Yeah. How important
the real value adds.
How important is strategy when you have these conversations with your customers? Do you often find that they have a pretty clear defined strategy, or is it something that they're still trying to work through and process?
Depends on the client. Those that have been in business longer term and are a little larger have better business acumen. They've kind of survived. They've got the battle scars. I know that that's important.
Yeah.
I think strategy has changed over the years. It used to be, that you would do these big formal strategic documents and, there's always the talk of the Japanese who, would plan out 250 years from now. Well, probably for small business, planning out in the next year is probably,
a lot.
Yeah. Not that it's not necessary, but that's probably what happens is they're thinking, they're trying to get through the next month, let alone,
Yeah.
But it really is important. You've got to figure out what direction do you want to go here? Okay. It's like having a compass. You got to have a compass in some way. All right. I guess if you don't really care where you're going, then you're never lost. You don't need a compass. You just keep going. That's not necessarily going to get you where you want to be.
Yeah.
So I think it's very important. Okay. How much does it have to be documented? I think some of that is maybe what makes it more of a daunting task for small business people is the actual kind of documenting this thing, and they're not really sure, what to do. But somebody once said, and I thought I read it was General Eisenhower. I forget who it exactly was, but he said, plans are nothing. Planning is everything. And it's always when the first shot is fired, the battle plan goes out the window because it's all, and that's kind of what business is. You can sit down pre-business. I can talk to you till we're blue in the face to come up with strategies and stuff like that. And then you get in the real world, looking for that first dollar coming in and, and everything's out the window because all of a sudden you found a new competitor, your people quit on you, whatever. So you're in the thick of battle right up front, but it's one of the value adds that I try to do with my clients is the planning process. And what that means is sitting down and just talking through things, asking questions. I mean, I'll tell people, you got the answers. I don't necessarily have the answers, especially if it's a specialty type business or something, that I'm not particularly familiar. I can't be an expert in everything. Okay. You're the expert in that business. What I can do is help draw out those, draw that out of you by asking questions. Kind of like actually by educating myself. Okay. I'm helping you to figure out your business.
Yeah.
Because I'll ask what looks like a stupid question, just because I don't know the answer, and they can, based on that answer, I may ask a different question. All of a sudden it gets them thinking about something different, Yeah. And it's not like I have brought a solution necessarily. I've helped them to find their own solution.
Right? Yeah. I think that's so much about what Amplified focuses on is coaching. I mean, that's really what it is. It's asking quality questions to get people to stop and pause and reflect and think, because we do this in our personal lives. I think we do this in our business lives as well, which is we oftentimes don't stop to ask ourselves the question. Yep. And even if we do ask ourselves the question, we don't always stop to actually process it and ponder it.
And then execute it.
It's oftentimes we kind of, it's like, well, what am I going to wear today? Well, I want to wear clothes. Yeah. And that's the end of the thought process.
Yeah.
We just kind of stop.
Yeah.
And we need to dig deeper.
or say we should do this and go back to autopilot and do what we were doing before.
Yeah.
And some of it is obviously with smaller companies, we're getting back to limited resources. It's like you're drinking out of a fire hose, as they say. I mean, you can plan to do this, but there's so much coming at you that day I didn't get a chance to do what I wanted to do, what the plan said I should be doing and wanted to do.
Yeah.
So it's planning is so important, and having certainly a direction as to where you want to be. Mm-hmm. Okay. And then trying to come up with some strategy. And I find I've got some clients that are, again, a little bit larger companies who are some very talented people and really know what they're doing.
Yeah.
Okay. And others, not so much,
Yeah. They're learning.
Yeah.
Figuring it out.
Yeah.
But they've taken the leap.
They have taken the leap.
And I think there's something to be said for that.
Yeah. And you know what I would say there? I would say that I think if you ask 100 people, would you like to own your own business? Probably, these are numbers.
Made up numbers.
Making up.
Yeah.
Okay. 98 out of 100 are going to say, oh, sure. Yeah. I'd love to be my own business. And what I would argue is out of that 100, probably only, again, making up a number, only 6 of them should be in business, because the other ones should be employees.
Okay.
What they want to do is they want to roll out of bed. Okay. And let me not sound so condescending. Yeah. They want a certain lifestyle, and they may be hard workers. They may be very knowledgeable and good at what they do. Okay. But you know what? They don't want the headaches of being in business because they really don't understand all what happens after the front door closes, and the customers go away. All that's required. When do you think all that bookkeeping gets done? It gets done on Saturdays and Sundays.
Yeah.
When does the strategic thinking get done? It's probably at 2 a.m. in the morning when you're awake, trying to figure out, what you're going to do the next day. And they don't want that kind of hassle. Plus, they're not willing to take the risk. And this comes back to what you were talking about before. What you started talking about was risk. Okay. You better be prepared to take risks in business. Okay. At some point you have to jump, if you want to go into business, okay. Yeah. You can do some part-time stuff and you can kind of, do this maybe as a hobby and things like that. But eventually, if you're going to be successful at this and move forward, you're going to have to make that jump and take that risk.
Yeah.
Okay. So
yeah, at some point you just got to pull the trigger and do it.
Yep.
And so many people, like you say, almost aren't really cut out for it.
Right.
It's a romantic idea.
Yes.
Right.
Yeah. Oh yeah. Yeah. And I'm going to make so much money. Okay. B, I can do whatever I want.
Yeah.
And C, I think success, how can I not be successful? Look at my business plan.
Right. Well, so that's this is an interesting question or idea is if you think about as an employee, what most of us are going to work 40 hours a week, let's just say, right? That's kind of the typical, if you're an employee, you're going to work 40 hours a week. Think back to one of your clients. How many hours a week do you think that they work?
Well, I'll tell you what, I've got a client right now that I work quite closely with. More than just a CPA, I'm really much more integrated into the company from a consulting standpoint. And I love these people. They are really, they're probably in their late 30s. Okay. One is very good at marketing. The other is very good at the production aspects. Mm-hmm. Okay. Have been through some trials and tribulations, but they have worked like crazy. Okay. And now they are moving into a higher growth phase. Okay.
Yeah.
It's not unusual for them easily to work 6 days a week. And now for the last month or so, because of increased sales and things like that, they're working 7 days a week.
Yeah. How many hours a day? 12.
Yeah. I mean, they're putting a lot of effort into this business. They've got a lot of potential. This is not it's a let's call it a manufacturing business. Mm-hmm. Okay. And they've done a good job of marketing the company. Yeah. They're starting to play with big boys in their industry.
Yeah.
But they're working their butts off.
Yeah.
But they're good at what they do. I think they love what they do. Yeah, they get tired, but they're,
But they just keep grinding and
they
and
keep
doing it.
grinding away. I really admire these people. Yeah. They work hard.
Yeah. And so that's an interesting point, which is, what do you want your life to look like? Because if you want to work 40 hours a week and then go home on the weekend and play with your kids,
Yeah.
there's nothing wrong with that.
Yep.
And that's a wonderful thing. But
And most people probably ought to do that.
yeah. But then you take another, like this couple or partners or whatever that you're speaking of, they're working 7 days a week. And so they've either got to really love it, or there's got to be a different motivation there.
Yeah. And I would say, their motivation is kind of interesting. Obviously, they want to make money.
Yeah.
I mean, let's face it. If you don't want to make money, geez, man,
Why are you doing this?
why are you doing this?
Yeah, why are you doing this to
Yeah.
yourself?
And if you want to be someone who provides social goods, well, then go work for a nonprofit.
Yeah.
And I, when I was in business school, we very much focused on, which I still do, is stockholder value. I'm not interested necessarily in stakeholder value. Now there's a lot of thinking of businesses as these social entities. Okay. And once again, I think we're talking about big corporations who have the luxury of being involved at the social level versus smaller entities, okay, who probably really just need to focus on making money, okay, because it's going to be more difficult for them to make money, okay. So I forgot where I was going with the whole story. That's just not unusual in my life, but
well, that's all right. I think that at the end of the day, I think that it's really a question of what do you want your life to look like?
Yeah.
And where do you see yourself 1 year from now, 5 years from now, 10 years from now? And also I think it's important to remember that life is about phases or chapters. And so just because you start off in one place doesn't mean that that's where you have to finish.
Yeah, absolutely. Yeah.
I mean,
that brings me back to these folks, besides the making money, is I think they want to be players in the industry. They like their industry. They like what they do. Actually, the products that they manufacture do have kind of a social value.
okay.
Certainly, it impacts individuals.
Yeah.
Very much so. And it's related to some healthcare issue things. So I think they feel good about themselves and their business, and they want to be successful. They're hard workers. They're the good old fashioned Americans.
Okay. Yeah. Put their head down and
they work hard.
So this is actually, now I'm reflecting on a conversation I had with my wife the other day in regards to the greatest generation, and I wonder to myself if they weren't the greatest generation because they went to war at a very young age, and they were put into a situation where they had to just grind it out every day in a wartime scenario. So the men were off in battle, and the women were at home taking care of, like building tanks. And I mean, it was like a huge.
And don't forget, coming off the Great Depression.
Yeah. And so there's this, it's like they were really working. And so the moment that they got out, they knew what it was like to work.
Yeah.
And to work long hours.
Yeah.
And to really push forward. And I think maybe we've lost some of that.
Well, if you want me to get philosophical, I could do that.
I want to do that.
But I would agree with you. I think there's a lot of truth to that.
Yeah.
It was the greatest generation, and, I think, being too affluent can be a problem. If things come to, there's a term for that, affluenza. You've probably heard that term. Okay. Entitled, children, for example, who just have a lot of money. They don't have to work for it. They, have everything handed to them, et cetera. And we are, fortunately, thank God, we are a very affluent country. Okay. We've been a very successful country. but to keep that going is going to require hard work.
Yeah.
Yeah.
Well, I think I was listening to a book the other day on Audible. I'm not much of a reader. I wish I was, but I find I just don't take the time to do that. But I can listen to a book. So I've found that I'm doing that.
That's as good as reading.
Yeah.
So.
I mean, it's close because I can, multitask. I can, do something mindless and listen. And so I find, or the book was talking about this idea that wealth often skips generations. And it's because of exactly what you're talking about. You're an affluent child, and so you don't develop those habits that made your parents successful. And what made your parents successful was most likely grinding it out.
Yeah. I didn't read the entire report. I read some excerpts of it, and there was a study that was done years back, and I want to say it was the Federal Bank of St. Louis that did this. And the upshot was first generation makes the money, the second generation expands it, and the third generation squanders it.
Okay.
And if you think about it, it's distance from the original effort and how much work has to go into making that money. Right? Yeah. Second generation has the advantage of the base has already been built by the first. Yeah. And that by that first generation, I'm not necessarily talking about, my parents, that greatest generation.
Sure.
It could be a first generation today, like the clients that I just talked about who are working like crazy. They may build this thing up to a good level. Well, their children may inherit it and expand it. Yeah. And then their great grandchildren wind up squandering it. So yeah.
How far? Yeah. And we're kind of getting to the point where I want to make sure that we wrap up, but how much is purpose going to dictate or drive some of that, right? So it's like, as the founder, I have a very clear purpose for what it is that we're doing, or at least I hope I have a clear purpose for what it is I'm trying to do. And as you go generations away, that purpose, does it get lost? Can it get lost?
It can get lost. And I think that you see that happening. Again, not an expert in this area. I'd probably be, I have to probably be some academic that studies this, but you can probably take some of the wealthiest families in the country, okay, names that you would know, right? And, or maybe more likely names you don't know, these firms that have been in the hands for generations, okay, and the children have been bred almost to inherit that business and the values associated with that business, the purpose of it's kind of like being, English royalty, right? Those folks are, I think, bred to feel like they are responsible for this nation.
Yes.
And they've got a purpose, and I think in a lot of family-owned businesses that have been around generation after generation, that has been bred. And you probably see, there's 5 kids in the family and, 2 of them want to go off and become musicians or something. 2 of them want to work in the business, but they keep it going because there's a legacy. There's a heritage associated with that, but a sense of pride associated with that business.
Yeah. So that's really good.
Yeah.
Well, as we wrap up, I guess what, maybe it's one thing or a couple of things, would you recommend to the individual that's just starting out? Like if you just kind of had to sum up our conversation today. One thing, and this sounds self-serving, but it isn't. Get some advisors, okay? Get some professional advisors in technical areas that you don't know about, okay? And I mentioned 2 of them, legal and accounting, okay? Accounting, tax, okay? Another one might be, and this is somewhat related to probably the legal side, but if you're needing real estate, get a good, commercial broker who can help you out getting good, space, and some marketing help. Some probably not right out of the gate, okay, but pretty soon on. Marketing is extremely important, and I'm not, I use the marketing in a broad sense, not just advertising, although that's extremely important, okay, and selling, that's extremely important. But thinking about, what they call the 4 Ps, and having a good marketing plan, all right, and then operations, being able to operate the business, in an efficient manner. Yeah.
Does that answer that question?
I think it does. I think that's a really good word. Yeah, I appreciate
okay.
you taking the time to explain that. And thanks for coming on the show. And
Hey, my
just
pleasure.
talking
It's been
about
great.
business.
We'll have to do it again sometime.
It was a lot of fun. I really appreciate it.
Yeah.
Well, thanks.